Hey, what's up, guys? rayBar checking in with another market update. If you haven't already, please go back and watch my last video. I think it was an absolute banger. Going into puts, put option or cash secured puts to be exact. Appreciate all you guys that have been following my channel. Today, I'm going to talk about kind of general market update. We had the Fed decision this week. Ended up not pausing rates, but like not increasing rates. Excuse me. So I think that's why we're seeing the market kind of roar higher. In this, like I said, in this video, I'll just go over general portfolio update, make it kind of quick and easy. And then next week, I might try and bring you guys something like put credit spreads or call credit spreads and kind of go in depth there. If you've seen with the portfolio, in the past hour, we're up about 20 bucks. Today, same thing. This week has been great. I think honestly what it was is, like I said, the Fed did not increase the federal funds target rate month, 3 month, and the year, right? You're going to see my cash buying power is down, but if you notice here, I have a lot of options collateral out there. That is because I'm starting to go a little bit more aggressive with some of my options plays to try and maximize my income on the portfolio. Still have a little bit of cash earning some interest. Crypto, man, ever since SEC was suing Binance and even Coinbase now, we're seeing a little bit of struggle there. I think there could be some opportunities. Bitcoin under 20,000 is usually where I like to start buying, but I'm still doing $1 a day here just in case. S&P 500, I mean, if you look at it this year, it has been booming, right? Past year, about 20%, even the last 3 months, about 15%. I'm still doing the kind of general buys that I've been doing. I ended up selling out of SPHD, only because, I want to bring you guys a more targeted portfolio where I'm picking individual stock winners versus index, even though the majority of my holdings is in VOO, the S&P 500 index. Recently added Palantir and NVIDIA to the account, and then that penny stock video I have, Origin Materials, again, a kind of carbon neutral materials company that is basically making everything. I think that this one is going to be a potential win. Trying to get up to about 100 shares in this. So far down about 7%, but we got time to work on this one. So basically, if you guys are paying attention with kind of the overall financial markets, you'll know that the federal funds rate right now is 5.25%, and that rate dictates so many different things, right? It dictates what mortgages are we going to be at, borrowing rates for corporations to fund their business, etc. I think the reason why we are seeing the market rally is because during the Fed meetings, Jerome Powell is still remaining hawkish, saying that there still could be potentially 50 basis points worth of hikes coming this year. But I think the reason why we're seeing the market go higher is no one believes him. If you know anything about inflation, jobs, etc., they're all lagging indicators, meaning that basically by the time the data comes out, we're already a month behind, if not a little bit more. So I think a lot of people are thinking, okay, the job is done. What the Fed has been doing, on an almost 15, 16-month rate increase cycle, all the data points that they're wanting to see come down are going to make it down, right? And with that, what are they going to do? They're going to pivot and they're going to lower interest rates. With that, you have companies that can borrow debt cheaper and kind of will go back to that full-blown growth mentality where, valuation kind of goes out the window. One thing, though, that I will warn is that even though a lot of people don't believe that the Fed is going to increase interest rates, there might be, a little bit of a pause with some of the, borrowing requirements as banks starting to tighten their lending as they kind of play out. Because you have to remember, right, even though no one believes that they're going to increase interest rates, target inflation is still 2% higher than the target rate that the Fed is setting. So to me, the job is not done. I think they blew kind of their credibility when they were going on with transitory inflation for, all 2020, 2021, even deep into 2022. And so that's why I think they're holding the line here, right? So finally here, one of the things I want to bring up, talking about the credit crunch for the banks, is Main Street Capital. Main Street Capital is a business development company, and that business development companies, they will typically lend to those middle market players that are having issues borrowing from the larger banks, especially as we see a credit squeeze. it's a little bit risky of a play, but I think that it's a great way to produce some yield. If you look here, about 6.69% dividend yield. I've been buying into Main Street Capital as I see that it's one of the best BDCs out there, in my opinion. Do your own research if you're going to jump in, but it's a great way to kind of increase the yield on your portfolio, as well as, in my opinion, get into a pretty decent stock. Next week, again, I'll go into the Roth. This has been kind of doing fairly decent overall, about 3% up, not too bad. So I'll make a whole video about Roth IRAs and retirement accounts. But yeah, overall, I think that my personal opinion, I think that we will, see at least one more rate hike come through this year. And if anything, they're going to hold flat before they reverse course. Hope you guys have a wonderful weekend. And the secret word today is pizza. Comment pizza in the comment section if you're still here at this part of the video. Smash that like button and subscribe, because I'm about to go enjoy some pizza for lunch. Hope you guys have a wonderful weekend.